We all know that it's a good idea to have some extra money stashed away for unforeseen circumstances, like emergency car repairs or unforeseen medical bills. But there's a far bigger reason to build an emergency fund, which we've uncovered over our combined 25 years as professional investors. And when we look back, this may have been the thing that really kickstarted our own financial freedom journey. Today, we'll be sharing this with you, as well as revealing our personal emergency fund strategy to help you seriously fast-track your own fund. We'll also show you how having an emergency fund can actually save you money each month. And we'll look at other important tips, including how big your emergency fund should be. But before we get into all that, let's discuss some of the best emergency fund accounts for South Africans.
Okay, let's talk specifics. What is the best emergency fund account? Well, it's important to think about what your priorities are. Our first priority for an emergency fund would be to have instant access to our money. The money must be liquid and accessible when you need it. Our second priority is to have an account that provides a decent return to help you protect your hard-earned savings from inflation and retain purchasing power over time. And our third priority is to select an account with low fees and low risk. So with those requirements in mind, we basically have two options. First, an instant access savings account with a bank. Here's a list of the top savings accounts in South Africa with instant access. And most of these offer a capital guarantee on your money, which is of course an added benefit. As you can see, African Bank, Absa and FNB are all pretty close, giving you a return of just over the 7% mark. While 7% is definitely not beating real inflation, which is more like 12% or more for the average South African, it's not a bad return.
Now importantly, we are not comparing any fixed deposits or notice deposit accounts here. Again, the entire point of an emergency fund is to have instant access to the money when you need it. So avoid accounts that tie up your money for an extended period of time. Our second option is an Access Bond facility on our home loan. As a reminder, an Access Bond is a type of home loan that allows you to pay extra money into your bond and freely withdraw it when you need it. Now, the current prime lending rate at the time of making this video is 11.75%, meaning that if you got prime on your home loan, you'll effectively be earning 11.75% per annum on whatever capital you have in the bond facility in the form of interest savings. And as an added benefit of saving in an Access Bond facility, it's completely tax-free. Because you aren't earning interest but rather saving interest, you pay no tax. This is a great way to save money, but just a word of caution. Banks have been known to sometimes lock up funds in access facilities. It may not be likely, but they can change the terms and conditions as they see fit. And if that happens, you might not be able to access your savings. As you'll see shortly, our personal strategy actually makes provision for such a scenario.
Now, before we reveal our emergency fund strategy, we're interested to know about yours. Do you have an emergency fund, and what savings accounts are you using? We'd love to hear from you, so feel free to share in the comments below. And just before we move on, here's a quick saving tip for you. If you have a well-funded emergency account, you might want to consider using that to help you lower your monthly expenses. Sound crazy? This is how it works. Chat to your insurance company and ask them about the possibility of lowering your monthly premiums by adjusting your excess higher. Most insurers are more than happy to do this. It does mean you'll have to pay a higher excess when you have a claim, but your emergency reserves will be in place to cover this. And if you don't ever have to claim from your insurance, you'll simply enjoy cheaper monthly premiums going forward.
Okay, so let's get into our personal strategy to give you some insight into how we think about emergency funds. We like to split our emergency fund into 3 separate baskets. 1/3 is a cash savings account, 1/3 in an Access Bond facility, and the final third in a highly liquid investment such as Bitcoin or a high growth ETF product. Both Bitcoin and an ETF have very low fees, and both can be sold for cash pretty quickly if need be. But we'd only sell this portion of our emergency fund, the investment third, as an absolute last resort. We always draw from our cash or Access Bond baskets first if we need emergency cash, and we always try to replenish any funds withdrawn as soon as possible to stabilize the overall fund. What this strategy does though is give you the best of both worlds. It serves the goal of being highly liquid, giving you instant or near instant access to your money when you need it, whilst also performing the very important job of protecting your emergency fund from inflation over the long term.
So how much money do you need in your emergency fund? Now, you may have heard the common recommendation to save 3 to 6 months worth of expenses in your emergency fund. And in fact, most professionals recommend this. But let's get real here for a moment. Having 6 months worth of expenses saved in an emergency fund is a pretty tall order for the average South African. In fact, for many people, saving 6 months worth of expenses might take 20 years to achieve. This is exactly why we like to use the hybrid approach, a savings and investment account under one umbrella. Asking the average person to save 6 months worth of expenses in cash before they even start to invest elsewhere may actually hurt their financial goals. Not to mention the fact that the longer they take to build the emergency fund, the more inflation is working against them.
Now yes, the investment third of our emergency fund is subject to volatility in the short term, and this may not make sense for you and your personal risk tolerance, but on a longer time horizon, the volatility is in the right direction. In other words, it's to our advantage, because the increased return on the investment portion of our fund pulls up the return on the overall emergency fund. And in our experience, the investment basket has greatly accelerated the growth of the overall fund. In our personal case, this actually helped us reach our 6-month emergency fund goals sooner than expected. All that being said, please remember this is our personal strategy and it may not necessarily be right for you.
There are also variations of the strategy you could try depending on your savings progress. For example, if you're just getting started with an emergency fund, you may want to try a 90-10 split where only 10% of your monthly savings goes towards building your investment portion instead of a third. This way you are putting more focus on building cash in your savings and access bond baskets, but you're at least still putting something towards the investment portion of your fund. And you're at least getting some inflation protection rather than nothing at all. Now, if you want to learn more about the different investment options you can use for your emergency fund, check out this video. But you may want to stick around for this last part.
So what is the real power of an emergency fund that we promised at the start of the video? And how did it kickstart our financial freedom journey? Having an emergency fund provides stability to your monthly budget. When unexpected costs occur, your emergency fund helps to smooth them over so that your cash flow remains steady. But that's not the punchline. The point here is not simply the mechanics of having a steady cash flow and being able to pay your bills on time. The real power is the shift in mindset that comes from it. When you're constantly living on the edge, one bad day away from financial ruin, you can't be anything other than defensive. Survival becomes your top priority, and as such, you close yourself off to any opportunity. You don't have the headspace or the energy to concern yourself with anything but the immediate threat of financial ruin. But when your finances are secure and stable, because of the safety net your emergency fund provides, you can start thinking offensively. You become open to opportunities and you find yourself shifting your focus from survival towards growth. The mental clarity you gain when you're not constantly stressed about money is profound. It was foundational to our success as investors. We hope that this insight will help you on your freedom journey and motivate you to continue building your own emergency fund. Thanks for watching.